Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. All right, so we have a market that is lower today. We're down over 1% on the S&P futures. The main culprit today is just the fact that there's been no positive movement on trade deals. So the market is looking for some sort of headline that says, hey, we have reached an agreement with Japan or Europe or someone else, or at least some negotiations in seriousness with China. None of that happened over the 3-day holiday weekend, and therefore markets are concerned. They're concerned because the longer trade deals take, the more damage to the U.S. economy is done. In addition, there's continued to be some chatter about potentially Trump firing Jerome Powell. Needless to say, if that happened, it would cause a cataclysmic near-term event in the markets, yields probably spiking above 5% and the dollar collapsing. All right, so let's get into the charts today. Let's take a look at what we have. This is the S&P futures. The S&P futures, again, this is kind of in the overnight here as we were trading here, and you can see it's been gently fading to the downside. But overall, from Friday's close, you can see we are down significantly, again, just over 1% on the S&P futures. Now, flipping over to the daily chart and doing a check-in on the charts here, what do we have? Well, we know we had this major support here, the major pivot top from 2021. You then didn't take the low from COVID connected to the bear market lows. That gave us our low on the market. We had the massive bounce a few Wednesdays ago. And then since then, what's been happening? We've been slowly fading. Now, the positive here is this fade could be a little bit of a consolidation before further upside, right? Is this a flag pattern? Right now, it would still factor in. You have the big green flagpole right here. This is a flag pattern. So this still would be slightly bullish, meaning that in the near term, markets could potentially move up. But again, if we start breaking much lower than this, once we get out of kind of the 618 Fibonacci and below that, it is no longer fitting in the mold of a bull flag. So this is very important for us as traders to understand, is that early on a pattern can be forming and we could be saying, okay, it's a good bullish pattern in this case. But if the price action negates that, you have to, as a trader, be able to recognize that and say, okay, we've now negated that. It flips the probabilities from favoring an upside move to potentially favoring a downside move. All right, now listen, we haven't done that yet. We're still stuck in this kind of, general pattern. The one level I'm going to watch is the low from the retrace day right here. So right here, so you can see the big move up on that Wednesday. This was on Wednesday, April 9th. And we had the next retrace day with a low right here. Now, as of now, we've stayed within that high to low, all of these candles. As long as that holds, which is at around 51.47, then I think you continue to favor the bull case here for a near-term move. Let's not confuse this as mid to long-term. I am still crazy bearish based on chart analysis that I've shown you guys. But near-term, this would still be a flag pattern as long as this low holds. Keep an eye on it right around 51.47. We could round that up to 51.50. Now, other problems are emerging. The 10-year yield. Remember this trend line we talked about last week? High pivot to high pivot to high pivot. This was your fourth hit, and sure enough, you broke out on it. We came down, and I said, okay, guys, we're back into this line. Yield should start to turn up again. That is exactly what happened both on Thursday of last week as well as Monday. And remember, Friday was a holiday with the markets closed. So again, we are up on the 10-year yield, which, as we know, that continues to push us in, at least push the stock market down, right? The market generally right now wants yields lower. It will rally on that. Yields going higher shows a disenfranchisement with U.S. debt from global partners. And again, if they are pulling back on buying our debt, we really don't have a lot of options. We could have the Federal Reserve buy it, but then it's basically the same as if we're just buying it. And again, that's never something you want to rely on. You want other people to have enough faith in the US and the US government to be buying our debt. And if they stop, yields go up. Another very concerning aspect, the dollar continues to drop sharply today. This again is putting pressure on gold to move up. But again, the dollar is a barometer for how global countries look at the US. And if they look at the US and say the US is no longer the great power that it once was, they won't be buying as many dollars. They won't look at it as a safe haven asset. And sure enough, not only did we break this downsloping trend line, which told us there was a breakdown, but we have continued to drop precipitously. I mean, this is not a small drop in the currency markets when you see this type of drop. Now, where are we going to run into support? There's a little bit of minor support right here at the current lows of the day. So again, just zooming in, you can see these little pivots. This is only minor, though. I would not classify this as major support. If we continue down, we can move the line right to high pivot, brief pierce, retrace, and the breakout. This now is the level I am focusing on as a potential major level. It's just below 97 on the DXY. Now, I want to be clear. While this would be a bounce level and a good bounce level expected, I still think the dollar goes lower later this year and into 2026. As again, I do think there's been a major shift in how other countries are viewing U.S. debt and the U.S. dollar. We've talked about de-dollarization for literally the last 2 years. I always said a year ago, I was like, guys, it's not happening that fast. Recent developments, in my opinion, based on the trade wars and the kind of abrupt nature of change to the relations with other countries, in my opinion, has now sped up that de-dollarization. Now, listen, de-dollarization doesn't mean the U.S. dollar is not going to be the reserve currency of the world in a year or even 5 years. It still will be. But is it speeding it up to where it is no longer, maybe 10 years down the line? I do think that is the case. So we just have to be honest with ourselves, right? And this is one of the reasons for holding long-term bags of gold or Bitcoin or alternate assets, in my opinion. All right. Back to the charts here. What stocks are moving today? NVIDIA, you can see NVIDIA down here, trading down on the day. I'm watching NVIDIA because I was doing research today, and there's this huge trend line going back to the beginning of the bull run. Now, from this low in 2023, NVIDIA rallied 980% up. Now, it is down about 30, I think it's down about 36, 37% here from the highs. But look at the low pivot right here where the bounce came in. A perfect trend line right there. Now, that's all fine and dandy, but if this line breaks, NVIDIA is unfortunately destined for likely a move down to the $50 level. So listen, it hasn't broken yet. We can't assume a break, all right? So again, assumptions are really one of the main faults of traders and investors. You never want to assume until it happens. But if this line at around $88 per share breaks on NVIDIA and we confirm, I would think, yeah, you'll have a stopping point here at around 76. Gap fill here at around 67, but eventually we see a $50 handle on NVIDIA. That would be quite something considering the stock at one point traded at 150. By the way, it was a $3 trillion+ stock at 150. It would be about a $1 trillion stock at 50, bringing its market cap all the way down to the $1 trillion level. Now, on Thursday of last week, we saw an antitrust suit, kind of a negative ruling towards Google. Alphabet, this stock dropped a little bit. It's trading lower today. This is now on my radar for a swing trade, and I'll show you guys the level. The level is right here at around 130 to 131. The reason this level speaks to me in terms of technical analysis is because not only is it the low pivot from March of 2024, but if we do a Fibonacci retrace, we can see it is also aligns perfectly with the 618. And remember, folks, if you want to up your game and up your win rate, find at least 2-factor levels to trade, both intraday or as a swing trade over multiple days. When you find 2 levels, meaning a Fibonacci in this case and the pivot low lines up perfectly, what that will do is the trade might have been, let's say, a 60% win rate without a second factor. It probably bumps it to about a 75+% win rate when you have 2 factors. If you can get 3 factors, I honestly think it goes up to about 80%. So again, big difference in win rate versus 1 factor in technical analysis versus 3. Tesla continues to nosedive, lows of the morning session down here. the key on Tesla stock is this trend line here at around the 214 level. This has acted as support from here to here to here. If we attack it again, technically, I would look at that as the fourth hit. There is a vulnerability there for a break of the fourth hit. Now, listen, we're still about $15 above that level. But if it does flush down into that, I would be careful. You probably get a small bounce, and then the next leg lower takes over. The downside support, where I will be looking to play it on a swing trade basis, is this: one hit, two hits. Third hit should still yield a bounce. Probability-wise, that would be around 170 on the chart of Tesla. So you give me 170 handle on Tesla, I likely swing trade it as a buy. Flipping over to gold, look at the move on gold, but also, folks, gold to me is now at its max move target. Not only that, but I'm going to make this statement, and you guys know I'm never shy about putting myself on the line with making calls. Today, this morning, I tripled up on my short on gold, and it's now 12% of my commodities portfolio. And the reason I did that is because I have a multiple parallel factor chart merging here. Now, lots of people will call me crazy. That's fine. I'm used to that. But if we look at this, you have the high from COVID, right after COVID when gold popped, and the low here. Take a parallel right to this low. You drag it up, you get that exact high. That's the red parallel. Then you say, okay, so that's just one parallel, and you even pierced it here, so no big deal, right? But then we look at the bigger picture. We take the high from the bull market of 2011 to the lows here in the bear market period just before the next bull run into 2011. So this was the bear market the 2020 bull high. This was the bear market period in 2018. And then you even connect it to the pullback here before the latest bull run began. And that parallel with the 2011 high, it gives us this level. So listen, is it possible that we blow right through this because of the concerns about global trade, because of the concerns about the US dollar, because of the concerns about firing Powell, all this stuff? Of course, there's always a chance I am wrong. I've been wrong before, and I'll be wrong again at some point in the future. But I base my decisions on data and probability. And when I get a parallel like this that goes back to 2011 and a shorter one that goes back to the COVID highs, I can't ignore that. And as a trader, if I start ignoring certain high probability trades and then selecting and taking others, then percentage wise, I don't win as much because I'll choose to not take one that I would have won on, and I might have taken a different one that I lose on. So it's about just consistency. Always just looking and saying, what's the probability here? Is it fit my criteria? Let's say 70% or greater. If it does, I take it. That's just the nature of the beast. And when it gets north of 80%, which is what I have here, then I say, okay, this is a point where I overload, I average in, I triple up essentially. And that's what I did here on gold. So again, we'll see. You guys know I'm not shy about putting myself on the line. So again, we'll revisit this over the coming days and see if this is a good call or a bad call on gold as we continue to trade here. Now, a good call from last week was a bull flag pattern. Remember, guys, I highlighted all week long the bull flag on Bitcoin. And sure enough, look at the pop on Bitcoin here, a beautiful move up. Again, where is short-term resistance? Around 88,500. But really the big level is right here at 92. And let's be fair, Bitcoin continues to be a stellar performer over the last, really, I think even if you go back to February, right? If you look at from February, this dip, we've basically been chopping sideways that whole entire time and actually might be heading towards the higher end of the range. And during this period, remember, the S&P here, the S&P has had a pretty dramatic fall since the beginning of February, right? Or mid-February. So really, Bitcoin has gone sideways as the S&P has collapsed down on the chart. And this is the ES, the S&P futures chart. You can see the drop that we've had versus Bitcoin, which from that same point right here has really just gone like this. All right. So again, to me, why is Bitcoin all of a sudden acting like a reserve or safe haven asset? The answer is very simple, because the dollar is getting trounced. So what some, and I'm saying some because there's still a lot of faith in the US dollar, but there are some bigger players that are saying, hey, listen, Originally, we would have put 100% in the dollar for safekeeping. Now let's do 90-10 or 80-20. 80 in dollar, 20% in Bitcoin or gold. Maybe it's totally saying screw the dollar, but let's put 80% in gold. Let's put 20% in Bitcoin. So there's this fundamental shift that has occurred here on Bitcoin in terms of the viewpoint because the U.S. has been hurting their image on a global basis, hurting the dollar as a reserve currency and treasuries as a safe haven asset. Very interesting stuff going on, guys. I mean, this is really fascinating kind of to watch this stuff play out in progress. All right, let's go to silver real quick. Silver continues to look strong, staying above this trend line. If it does continue up, we're looking at around the $35 level right here. That'll be the next key level. If we look at oil, oil is down today. The negotiations with Iran went well over the weekend, or at least just the fact that Iran and the U.S. are talking is a positive. So while oil moved up on Friday, it's back down a little bit. I still think you could end up going back here. I'm going to leave these lines in just to kind of dictate that, but I wouldn't be surprised if we still touch here. But let's be fair, the bigger macro move is still to the downside. Lastly, natural gas. Let's take a look at that. And nat gas continues to move lower. It may confirm the breakdown today below this line. You closed on the line, below, didn't confirm. We'll see if today's candle confirms the breakdown. But I'll tell you, folks, listen, individually, we have a lot of earnings this week. Tesla reports earnings, Google/Alphabet, a lot of big companies reporting earnings. Today, there's not a lot of major movers aside from like Tesla and a few others, because again, it's a Monday morning after a 3-day weekend. But the action in the dollar, the 10-year yield in overall Bitcoin and the gold trade is unbelievably fascinating to think of what's going on in the underbelly to create these moves. And it really should honestly wake a lot of us up out there. If you're watching this and you've said, oh, listen, it is what it is, things will go back to normal. They may, but you can't deny that there's some damage being done now to the U.S. dollar and the debt market in the U.S., which I think ultimately ends up having implications later on. All right, you guys are awesome. I hope you enjoyed today's game plan. I got to get to my trading room and start rocking it this week. Thanks for being with me. Thank you for supporting Verified Investing and our data-driven approach to analysis and probabilities. You guys have a great day. Let's make some money. Take care.